Yeah, the Q1 updates are not great. Yesterday's stock, as it is corrected quite a bit, was down 2.25%, and today there could be extended fall on that one. The only thing which might just kind of keep the downside limited on the stock today is that MSCI flows which are expected, so people might not go ahead and short this stock very strongly. But nonetheless, the update that we have got is fairly muted per se, because on a quarter-on-quarter basis, both in terms of the loan as well as the deposit growth, the company has fallen shy of expectations anywhere between 1 to 3% versus the street estimate. Of course, it's a seasonally weak quarter, but what brokerages are saying is that it's even weaker than the average that we have seen over the last many years, and that's the key disappointment. Now, Nomura, for instance, says that both loan and deposit growth are generally soft in Q1, but the reported numbers are a tad lower than usual. LCR was also up quarter-on-quarter, and the average deposit growth has been almost 4.5–6%, 4.5 to 5%, but that was not there this time around. They're expecting some moderation in core NIMs going forward as well. IFL says that, of course, it's weaker than expected, show both on loan and the deposit growth. The current account deposits degrew by 14% sequentially versus the average degrowth of almost 10% that we have seen in the last 5 years. So clearly a lot more accelerated in terms of the decline this time around. This suggests perhaps that higher than usual bulk deposit mobilization had happened in Q4, which is getting unwound now. Macquarie says the decline in deposit growth is driven by seasonality in CASA. Decline in corporate and wholesale loan drives flat growth in line with the strategy of improving product mix, and they expect NIM to be broadly unaffected. But for today, my guess is the stock will be under pressure. Let's see whether they're able to kind of deliver on the NIMs front, because retail deposits going up is definitely good news in terms of the overall mix, but NII might be a bit soft.
In fact, if you see that entire trade which took place from 1424, 1450 or to 1750 may get a bit challenging and unwound, but at the same time, the speed of opening new branches, they have been the most aggressive, and from here on, when the challenge actually is about deposits, it is banks such as HDFC, SBI, a few others, very strong retail franchises which will be able to garner bulk of the deposits. So at the same time, and the flows which Anisha was talking about, almost 3 to 4 billion as per estimates, will keep the false cushion in this one.